The European Commission adopted an independently rated green bond framework on Tuesday. This is a further step on the way to issuing green bonds with a volume of up to 250 billion euros, or 30% of the total issuing volume of NextGenerationEU, the European economic stimulus package after the corona crisis. The framework gives investors confidence that the funds raised will go to green projects and that the Commission will report on their environmental impact. The Commission plans to issue the first green bonds in October when market conditions are suitable. EU Budget Commissioner Johannes Hahn said about this, the EU's intention to issue up to 250 billion euros in green bonds by the end of 2026 will make us the largest green bond issuer in the world. This is also an expression of our commitment to sustainability and places sustainable finance at the center of the EU's development measures. As already announced, the Commission has also revised its plan for construction financing for 2021 and confirmed its intention to issue a total of around 80 billion euros in long-term bonds, so-called EU bonds, this year. These are to be supplemented by short-term EU bonds, so-called EU bills, in the double-digit billions. The Commission will only offer EU bills through auctions. The corresponding program is scheduled to start on September 15th. The Commission will usually hold 2 auctions a month for EU bills on the first and third Wednesday of the month. EU bonds are also issued via the auction programs, which complements the syndicated issues. The Commission's issuing calendar published generally includes 1 auction and 1 syndicated issue per month for bonds. Commissioner Johannes Hahn added, the confirmation of our original financing plan for 2021 is evidence of the excellent planning and preparatory work so far. Another great news that will further increase the attractiveness of EU bonds and have a lasting impact on the capital markets in the EU is the launch of our auction platform. The framework for green bonds presented today under the umbrella of NextGenerationEU, or the Green NextGenerationEU bonds, was developed in accordance with the principles for green bonds of the International Capital Markets Association, a market standard for green bonds. In line with common practice, the frame was reviewed by a second party, Vigeo Eiris, part of Moody's ESG Solutions. The auditors believe that the framework is in line with the ICMA's green bond principles and the EU's broader environmental, social and governance strategy and will make a solid contribution to sustainability. The framework has been aligned as closely as possible with the EU standard for green bonds. This is reflected, for example, in the fact that part of the eligible investments under the Development and Resilience Facility, the main instrument to stimulate Europe's recovery, have incorporated the technical assessment criteria of the EU taxonomy. The framework presented today shows investors how the funds raised by issuing green NGEU bonds will be used for green goals. Specifically, the proceeds from the green NextGenerationEU bonds are used to finance the share of climate-related expenditure in the Development and Resilience Facility, or Recovery and Resilience Facility, as I would say. Each member state must devote at least 37% of its national development and resilience plan, that's a roadmap for the use of funds under the Recovery and Resilience Facility, to climate-related investments and reforms, although many member states intend to exceed this minimum percentage. It's crucial that climate-relevant investments must meet the criteria of avoiding significant impairments in order to ensure that the investments are environmentally friendly and have no negative effects. In accordance with the provisions of the Recovery and Resilience Facility, member states notify the Commission of their environmental expenditure. The Commission will use this information to show investors how the proceeds from green bonds have been used to fund green change. The reporting is broken down into 9 categories defined under the NextGenerationEU Green Bond Framework, with clean energy, energy efficiency, and clean transport making up the largest proportions. In line with the normal practice, the framework provides for reporting on both the allocation of funds and the impact. The Commission will use Member States' data on spending on green projects to report on the allocation of funds. These reports on the use of proceeds are verified by an independent external auditor. The reports on the effects are drawn up in cooperation with various Commission bodies and rely on the wide range of specialist knowledge within the institution. These reports will allow investors in NextGenerationEU green bonds to assess the positive impact of their investments. The European Commission relies on the advice of independent experts to ensure that the impact reports are reproduced in a meaningful, impartial, and accurate manner. On this basis, the Commission will disclose how the proceeds from the NextGenerationEU green bonds have been allocated to different investment categories and member states. The modalities and deadlines for the independent impact assessment will be determined and announced in due course. Following the publication of the framework, the launch of Green NextGenerationEU bonds is imminent. The first issue is already planned for October 2021 as a syndicated issue. NextGenerationEU is a temporary development tool with a volume of almost 800 billion euros, with which the recovery of Europe from the coronavirus pandemic is to be supported, and at the same time a contribution to the building of a greener, more digital and more resilient Europe is to be made. To finance NextGenerationEU, the European Commission will raise up to 783 billion euros on the capital markets on behalf of the EU from now until the end of 2026. 421.5 billion euros are to be made available mainly for financial aid within the framework of the Recovery and Resilience Facility and other programs. 385 billion are for loans. Overall, this results in a credit volume averaging around 150 billion per year. Given the size, frequency and complexity of the proposed fundraising transactions, the Commission will rely on best practices from large and frequent issuers and will pursue a diversified funding strategy. In September 2020, the European Commission sent a clear signal of its commitment to sustainability by announcing its intention to raise 30% of NextGenerationEU funds by issuing green bonds and using the proceeds to finance green investments and reforms. And I'll see you in my next video. Bis gleich.